Question, coincidentally, is from Tata Motors itself, coming in, as in on Tata Motors itself, coming in from Pune. Ankit Khandekar writes to us. He holds about 250 shares of Tata Motors at 318 rupees a piece. He's a medium-term investor with an investment horizon of 3 to 4 years. He wants to know whether to hold or add more at current levels or book his profits or maybe switch to another stock. Mayuresh, two interesting things stand out. One, he's invested in Tata Motors and held on to those gains. Secondly, he defines medium term as 3 to 4 years. That is something a lot of the impatient lot lately would define as ultra long term, some of those new entrants into the market. So 3 to 4 years from here on, Tata Motors at a time when it's unveiled its concept, a futuristic looking Avinya, what do you think he should do? Should he bet on the EV brigade from a 3 to 4 year standpoint for Tata Motors? Or maybe look at Maruti, whose numbers are just expected in any time now as we speak.
Afternoon, Mangalam. No, you're absolutely right. And I think the model that they've probably displayed is looking stunning. So I think if you're probably looking at designing, if you're looking at the engineering aspect, I think the Tata Motors guys are getting the right stuff in the right place at the right time. Having said that, the entire EV ecosystem and the investments that Tata Motors is expected to make, along with its competitors and peers as well, I think the next 1 to 2 years are going to be defining for this entire OEM ecosystem as well. Because there are a few launches that are expected to come through at the end of 24, 25 as well. And a lot of these existing players in the market, because Tata Motors' existing ecosystem, which involves JLR, contributing significantly to the EBIT. A significant contribution is expected to come from there and various markets that it caters to, North America, China. And looking at the kind of innovations that are probably going on at this point of time, I think the kind of horizon that is probably spoken about, as per the O'Neill methodology, I think the entry points become 446 if it starts crossing that 50 DMA line to begin with good volumes. And it's creating a very nice stage as per our methodology around that 525, 530 mark. So I think the second stage to add more or pyramid upwards might be once it crosses those levels. Can it do that? Probably price strength is indicating that EPS strength should start picking up over the next few quarters, and a strong N factor acts in its tailwind with all these factors that I spoke about, aiding its earnings growth over the next few quarters, with a lot of capex getting front-ended. But these two levels is something that you can watch out for in terms of pyramiding the stock upwards.
Ramay writes to us from Udupi. He owns about 100 shares of Adani Ports at 650. A medium to long-term investor wants to know whether to hold or sell maybe or stay invested at current levels. That's the word coming in. He's sitting on a profit of almost 22,000 odd rupees. Adani Ports recently hit a record high as well, just a couple of days ago. Mayuresh, this is the flagship of the Adani Group stocks, which have been on a tear already. This is a part of the Nifty. This has done well and recently hit a record high as well. What do you think the visibility is on Adani Ports from a long-term perspective?
So two things happening here, Mangalam. In terms of the business momentum itself, the expectations in terms of cargo movement is going to be pretty large. What you're seeing at this point of time in terms of container-related issues globally, and you're looking at container prices go through the roof at this point of time. Shipping rates, both in terms of Baltic Dry Index and Baltic Wet Index, and any ships associated with that, the Suezmax, the oil tankers, the rates have gone through the roof. So I think as cargo movement comes back pretty sharply, I think the kind of mechanization that Adani Ports has, I think that will obviously affect a lot in terms of volume-led margin growth for the company itself. On the other hand, when you're probably talking about expectations in terms of how earnings will probably get laid out, earnings should be pretty stable because as volumes will grow exponentially moving forward in the post-COVID world, Adani Ports will benefit significantly. And the third aspect to the entire argument will be the SEZ as well. So I think the economic zones and the land parcels that it has probably got, monetization thereof, intra-company holding has come up significantly. And therefore, the kind of leverage on the balance sheet is also coming off quite well. So as per the O'Neill's methodology, again, I think it's in a long consolidation phase. We believe that if it crosses 900, momentum can come back into the stock with a plan.
All right.
I mean, I would agree with Rahul to a large extent. I think the misses is something that the street did not like. So I think the NIM compression that happens of 10 bips quarter on quarter, because of lower provisioning, I think the profit got inflated to a large extent. But look at the return ratios. I think the best in 24 odd quarters that you've probably seen, the expectations in terms of advances growth still expected to continue at a very, very good pace. So if you're looking at the overall slippages for the bank as well, at around 9,400, 9,500 odd crores, I think it's a very, very manageable book at this point of time. So I think constructively, as the bank builds up its advances book, as the bank builds up its deposit book as well, and banks with a good liability franchise, all these private players, along with get better credit deposit ratios, I think they should benefit well, even in a rising interest rate scenario, even if it comes through over the next few quarters. So I think in the next couple of quarters, things will start improving for Axis Bank as a whole. My own sense is that if the investor has it, it's a little bit below par today because of the sentimental effect on the numbers and trading below moving averages as far as the O'Neill methodology is concerned. But largely, I think if it manages to spike up another 15, 16 odd rupees, manages to stabilize around that 750 odd levels, I think that is one pivot level that we'll probably look at where the investor can even accumulate more. If it sustains after today's move and stays in that price band and the pivot levels of around 7.
Rahul Sharma. Gentlemen, the next query comes in from Kolkata. Saugata Das writes to us. He holds about 200 shares of KEI Industries at about 492 odd rupees. He's roughly tripled his money. He's making a considerable profit, almost $1.5 lakh. What should he be doing going forward with this? Mayuresh, do you track this? Your thoughts?
Absolutely, Mangalam. In fact, it's very, very close to our pivot as well. And generally, I think if you look for the cable and wire outlook, I think the kind of capex allocation that has happened for the budget in the real estate, the kind of numbers that you're probably seeing in the real estate ecosystem as well, I think organized players like KEI should benefit significantly. So in the 9 months, if I'm not mistaken, I think the company has reported a revenue growth in excess of 30 odd percent. Obviously, it's driven more in terms of commodity prices. But I think the margins, because the pass-through had happened, the margins got maintained at 27% at the gross level and around 10 odd percent, again, if I'm not mistaken, at the EBITDA level as well. The second element is also the emphasis that KEI is putting on the B2C business. So a large element in terms of B2C to drive revenues to around 50% from 40 odd percent at this point of time is going to be extremely margin accretive. And therefore, I think the kind of dealership addition that they're probably doing, almost 1,600, 1,700 dealers odd that they have at their network right now, which they're expanding very rapidly every passing quarter and also expected to get into the FMEG part of the business as well. So I think all these factors probably ensure that KEI can do well. And therefore, the return ratio should also be stable. Around 23-24% in terms of ROEs. So if he's holding on, he can probably hold it.
All right. Just meanwhile, keep an eye out on Gokuldas Exports. Those seem to be phenomenal numbers from the company. 58% growth in the revenues. The EBITDA's more than doubled. The net profit too has seen a big surge. Gokuldas Exports, in fact, as a result of those numbers, where the margins have crossed double digit, 13.1%. This compares with around 9.5 odd percent. The stocks rallied. The net profit has almost quadrupled from 16 crore odd. It's gone all the way up to 61 crores. The stock's sitting with a gain of almost 14 odd percent. The intraday of Gokuldas Exports comes up for you on the screen. A consolidated revenue growth of 58%. And there you have it. The impact of these strong numbers immediately visible. It has been, one of the stronger stocks in the textile space itself. The textile space has been a bust. Over the last 3 months, we did see some bit of volatility. But on these numbers, there is a big surge, almost 15% on the stock. The last question for the day. Mrityunjay Jha writes to us from Patna with an investment query. He wants to invest in sugar companies. He's a long-term investor, wants to know more about the space and the sector. Mayuresh, coming back to you once again, primarily because it's more of a fundamental related query. He wants to invest in sugar companies from a long-term standpoint. Sugar companies, up until the last couple of years, were seen as cyclical plays. Now with ethanol coming in, do you think this becomes structural? And in light of the rally that we've seen in sugar stocks already, do you think this is a good time to enter?
Still a nice possibility, Mangalam, because as you rightly pointed out, I think the entire diversion that is probably happening towards ethanol. And again, I think the pricing that sugar companies are probably deriving at this point of time in terms of ethanol B, and I'm not talking about sugarcane juice at this point of time, it's purely in terms of ethanol B, in terms of realizations per liter, almost around 58, 60 odd rupees. I think that becomes a key significant factor. With the government initiative in terms of the blend rate expected to go up 20% in the next few years from 8% odd, I think a lot of tenders will start flowing in for these companies. And a lot of these companies are expanding their distillery operations as well, with a lot of captive power for those operations as well. So I think the kind of volume growth that will come through can be significant for most of these sugar players. Along with that, because of the cost optimization, because of captive power, will get reflected in terms of better realizations and better margins as well. And again, on a global scale, a lot of Brazilian output is also getting diverted to ethanol. So I think the raw sugar prices on the core business itself are also expected to remain very, very stable. So again, it's a commodity cycle for sugar companies 2 to 3 years. But again, I think they're in the sweet spot because of ethanol. So I think if you are looking at sugar companies, I think we prefer leadership companies within any space. So Balrampur Chini is one company that probably comes to mind. If it shows some bit of a decline on lower volumes, I think that can be the best bet when it comes to sugar companies. Others are also equally good, but they're probably far away from their pivot as per the only methodology.
All right, Mayuresh. Thanks a lot for that. In fact, Mayuresh, Rahul, we'll take your leave on that note with the news that the market's actually now moved into the red. The Nifty's sitting at the low point.